All right, Greg, we're live, man.
Cool.
How you doing?
Good.
Good. Hey, we wanted to come together this week. We're in the month of February. We're a month and a half into the new year, not quite a month and a half. We're getting closer. We are releasing soon. I think this week we're releasing our company-wide market stats for the entire company. Greg, I don't know if you're aware of this, but we're releasing a big comprehensive review of how the company every single market that we're in. So that'll be interesting to see. It's coming up pretty quick here. But we wanted to talk basically, Greg, you and I want to talk about how did we do in 2021? Where are we at, like compared, like our journey from 2006 when the market crashed for the first time back then, and we've been kind of whiplashing back and forth until now. Where do you think we're going in 2022? How are interest rates and inflation playing a role? And the goal of this conversation is hopefully being able to equip agents to know how to talk about these things, or know where to go to learn these things, or remind you to go and become a student, right?
Yep. I would add to that, Paul, that as I think about this, and one of the things that we always want to do is ask ourselves at the beginning of a call, what is it that we are hopeful that the agent community will hear during this conversation? What will be the takeaways? What can you use? And so, when I think about this, I would start by asking the agents, have you ever lost a buyer? Have you ever lost a seller? And you can try to find out from them after the fact. It's kind of a losing situation. And I'm not sure we ever will get the truly the heart or the meat of the issue as to why we did not get to work with somebody. But I'm convinced that there are things that you can know and that you can do. So you will never find yourself in the position of finishing up a presentation or a conversation with somebody, walking away and wondering, how did I do? You should walk away knowing how you did, and you should have a plan going in as to what things you're going to cover. There's nothing wrong with having a little 3x5 postcard or something, or a piece of paper that you kind of do a checklist as you walk through with a buyer or a seller. And so I would encourage all of you to sit and think about, what is it that I can give these people to provide them confidence in me, so they don't need to talk to anybody else, because I believe it's possible for you to provide that if you do it right. And so, I would ask each of you, what are the, I've always been a stats guy, and I know that's not everything, but I'm also been a very relationship oriented person. So I've got this combination of statistical information plus the relationship side. And so if you can combine those, I think that makes for a very powerful presentation and introduction to
your argument that you're making right now is it's in your best interest to understand these stats, be able to explain these stats, be able to have a conversation, to properly set up expectations with your clients, to explain where we're at, the challenges we might face, whatever it might be. You're basically saying balancing statistics, balancing data with the emotional side of things.
I want the agents at 5-Star to go into every situation with confidence. And I've always referred to it as a humble confidence, which means that you know your stuff. So it doesn't matter where they take the conversation, you're prepared. You can go anywhere. If they want to talk about the stock market, if they want to talk about interest rates, if they want to talk about how are things selling in their particular market, so you would have those answers.
And statistics you're saying gives you that level of confidence.
I think that statistics are hard to argue with. And I think that if the client thinks at any moment in the conversation that either you don't know what you're talking about, or you're guessing,
Yeah.
Or two, that they know more than you do. And that might even be a bigger death threat for you working with them.
Yeah.
And not, if they believe they know more than you, they're thinking, why would I hire somebody that knows less than me?
Well, also it allows you to let the market be the bad guy potentially, right? Remember back to 2006, 2000 through 2011, Greg, when we'd walk in and we would be in homes that were upside down, losing money every single month, not going up every month, going down every month. And, you know, you're having a tough conversation when you're asking them, you know, how much money they have in the bank to cover losses.
Right.
And that's where a market analysis, the data, can be your best friend at that moment to help you explain what's happening without you trying to convince them that you know what you're talking about.
Right. So as an example,
let me show you this example. While you're doing that, I'm going to share a screen. Go ahead. What were we going to do?
No, all right. I would say to you guys, what are 5 statistics that would be important to a home seller to know to help them understand how they should price their property? And so, Paul, you just took away my notes there.
Oh, all right, hold on. Let me stop sharing so you can get back to your notes.
All right, thank you. And so anyways, to me, what drives pricing? Well, it's supply and demand. And it's really simple. As long as the supply is bigger than the demand, prices are going to be soft. When demand is bigger than supply, so prices go up.
Let's illustrate this real quickly here.
Oh, go ahead.
All right.
Go ahead.
So what I want to show you really quickly here is I want to show you, can you see this chart, Greg?
Yep.
So this is the national pricing trend of houses. And don't worry about over here, you guys, if you can see over here on the left-hand side, this section here, that's your average price. That's your price. Here's your year down here. Okay. Now this is across the nation. Now I'm going to grab a local association from Michigan. I'm going to show you that chart and you tell me if there's some similarities here. So I'm going to shrink these so you can see them. This is national versus local. The same time frames.
So the bottom is 2009 and 10.
Right. Do those look like similar charts?
Very much.
Okay. So what the point I'm making here is a lot of times we like to talk about how stats are local, and stats are local, but there are macro trends, national trends, worldwide trends that we can't escape, that are just here. And if you look at this chart right here, you see over here, this is the 2006 top peak. Oh, here's the 2006 top peak, right? And so then you can see how the local market follows the national market. Yeah, the numbers are different, and yeah, the volume might be different, and all of it might look a little different, but overall, the trends are very, very exact. So what we saw back in 2006, Greg, was we had tons of supply right here, right?
Yep.
Or tons of supply right here. And then all of a sudden we couldn't sell it. And here you go. So here's an example. And everyone should study these graphs. This is a good example of right here. So let's go to average number of current listings. See that?
Yep.
This is 2006, 2007 range right here. And here we are now, right? Down here. But then if you look at the way the pricing worked, look at pricing. It's like the exact opposite, right? Supply and demand, very, very simple basics of stats. So anyways, I wanted to show you those things so we could just basically, a lot of times when we have these conversations, someone will try and derail the conversation saying, yeah, but I'm in a different market, or yeah, but my market's a little different. Well, okay, your market might be a little different, but overall, we're kind of experiencing the similar trends.
Right. So we know, to get a little bit more specific to help the agents bore down to a specific market, if you were in East Grand Rapids, as an example, I'm not sure how many homes are on the market there right now, but I can tell you in Grand Rapids, which normally has 5,000 homes on the market before all of this craziness has taken place, we are, as of a week ago, we were at 389 listings. But when you look at the number of sales at the end of the year, we only sold, I think it was like 500 more homes, even though we don't have, you can see we don't have any
Well,
inventory.
This is an interesting question too, because everyone says, oh, there's nothing available, which is true, right? When you look at it objectively and you go like, hey, look, there's not much available here. But what you just said is really interesting. We're actually selling almost, or maybe just more or just less than what we do in any other year. But we're listing and selling so quickly, but the overall number of sales sold, it's not like we sold less just because we have less inventory.
The churn is faster, the velocity is faster. So it appears that there's nothing happening, but it's like I can tell everybody as a broker, I sit there and I look at this and I go, well, how are the agents going to sell any money and pay their bills and all those things? And it's like in every month, I look at the number of sales, and in the month of January, it felt like we were slow, but we ended up 5% higher than January at a year ago. But let me continue here. So inventory supply is big. Right now, in most markets, there's less than a 1 month supply. In the Grand Rapids market, I believe there was 1 week supply. I mean, where normally we would have a 5 month supply. And I think if you go into any market from Jackson to Alma to Traverse City, Kalamazoo, Muskegon, wherever you go, it's the same story. The numbers might be a little bit more, a little bit less, but the bottom line is it's all following the same trajectory. So one of the stats I think you have to know and follow is the inventory, and you have to follow the trends. Is it building or slowing? But remind yourself that 1 month is not a trend. Right? You probably need 3 to 6 months before you can call something a trend.
But think about this. I think it was about a year ago. We started hearing a bunch of people saying, oh my gosh, it seems like the market is shifting. Like houses aren't selling as quickly. Oh my gosh, like my house is on the market for 3 weeks. What's happening? And it was amazing because I looked at the inventory and we had gone from 0.8 months to 1 month inventory. And so you have to remember that, like you just described a normal market as about 5.5 months supply. And if your market is sub 1 month, that means your market has to slow down by 500% to get to a normal market.
And you don't want that.
Right, but I mean, even if it slows down by 100%, that's going to feel scary. But we're still in this insane supply and demand issue. Even if it slowed to 1 month, 1.5 months, or even 2 months supply, we're still solidly in a seller's market.
Absolutely.
So, Greg, one thing that we've been following a lot on is interest rates and inflation.
Yep.
So tell us, you used to work in you worked in a market where you had between 12 to 15 months, 12 to 15% interest rates.
Yes.
How did you sell houses?
Land contracts, and not many of them. And people were hurting. Agents were getting out of the business because there just wasn't anything to sell. People typically, unless they absolutely have to, corporations are not going to move people around in an environment like that. Mm-hmm. People aren't going to move from one side of the city to the other for 15 to 18% interest rates.
But what we know about interest rates is it reduces buying power for buyers. Yeah. Because the money doesn't stretch as far, right?
Yep. It's pretty easy to figure out. Take 1% on a $300,000 loan. That's $3,000 a year. That's $250 a month increase in a payment. Well, that's probably going to knock some people out of the ability to afford what they could have afforded if they had bought back in December.
So what's going to happen is there will be a buyer right now that is going to be priced out. If interest rates hit, almost 5% or upper 4%, so you're going to knock certain buyers out. Somebody's
going to probably not be able to buy the house that they had hoped to buy,
or have to readjust their expectations.
And it's what's crazy at the same time, you've got prices are going up and interest rates are going up. So it's almost like a double whammy for a buyer, right?
Right. And
okay, so you've got inventory, you've got interest rates.
Really quickly here, Crystal Halleck asked a question. She asked you specifically if you have ever seen a market move this fast before.
In sales, no.
In real estate.
Yeah, no, I have never seen a 1 week supply.
Well,
I had heard about it years ago, like it used to be like California had this type of stuff.
But that's still within recent history.
Yeah.
So,
Yeah,
so
no,
what I want to say
I've
is
never
I have an answer for this too. GRAR, and again, I'm only using this because I belonged to that association for so long. They broke a record for speed of the market when they dipped below, I think it was 3.5 months supply. That was the fastest market they'd ever recorded. And so now we're sub 1 month. So we're so far beyond what was normal. So again, that was in 2013-ish when GRAR set a record for speed of the market.
Well, and again, I mean, we had that meeting out there at Thousand Oaks a couple of weeks ago, and somebody mentioned, that there was a house for sale for $75,000, which was a fixer upper, and there was 100+ showings. I think there was 50 to 60 offers, and the house ended up selling for $175,000.
Yeah.
It was listed at 75. So that's crazy. I mean, but at the same time, I think what we have to do is, those are the outliers. That's not the normal, right? But normal today would be a house is, if it's priced properly, and the big question is, well, what's properly? Well, that's because you've done the homework, and that we're in an upward trend. So the sellers are always going to want to push that envelope, right? When you're in an upward. So what I want to tell you as agents is, don't lose a listing fighting over price. Take the listing, work with the sellers. Don't create a situation where the seller says, well, I guess you don't have any faith or confidence in my price.
Yeah, right. So then what you do, right. So then what you do is, once you're listed and maybe you don't sell super quickly, maybe it's sitting here for a little while. Well, then we pull out the statistics and we can have a conversation with our clients about that.
Start talking logically, strategically.
We have had a couple realtors that were very active in the bottom of the market, right? Where back then an overpriced listing was just going to be a weight, around your shoulders that you're gonna have to carry for the next 18 months. Because back in 2006 or 2011, we did have markets where we had a 15-month supply. And so back then you would actually price below market rate so that you could catch the market when it was going down to meet you. You wouldn't overprice. But they had to reshift their thinking for this new market, because you remember as recently as 2013, 2014, Greg, we would have agents being like, this is crazy. There's no way I would ever have a buyer buy a home in this marketplace. I'm telling my buyers to stay put, stay on the sidelines. This is nuts. Don't go near it. And that was in 2013.
Well, and they were doing it in 17. They were doing it in 19.
You have to remember that we don't make the market. We interpret the market. We navigate the market. We need to understand the market.
Right. So agents, one of the stats, if I were a seller and I were talking to you about listing my property, I'd want to know what you think is going to happen in the coming months. And well, okay, so I would say, well,
you're going to give us a prediction. Is this a prediction?
So I'm going to first say, well, I'll tell you what, I'm going to bring the crystal ball out here in a second, because let's start with that it is a crystal ball when you're talking about the future of real estate.
Right.
But I will have that conversation with you. But here's where I want to start. I want to start with the fact that in the last year, prices in your market, on average, not everybody, on average, went up 13.5%. Why was that? Well, it's because the supply and the demand. So what's changed in 22? And the answer is nothing really. We are having an interest rate conversation, but so far it's been pretty minimal.
We're also having an inflation conversation now.
And the inflation conversation is in there. But as a seller, I'm going, well, should I wait? Well, I guess that depends. Are you going to buy too? Are you going to buy a more expensive home? Because if you're going to buy a more expensive home, the house you're in right now, if we go up 10%, is going to go up 30,000 this year. The $500,000 house you're looking at is going to go up 50. So you just lost 20 grand by waiting, by staying put. And so that's the risk and the chance that people are taking by sitting on the sidelines. So you need to know what the price increases have been in their market. And then if the inventory is the same, and watching what's happened so far in the first month and a half of 2022, has anything changed? And I don't see it. And there's nothing I'm seeing.
The inventory problem is still here. And guys, as long as we have a supply and demand issue, that's just the world we're going to be in, where we're going to see prices going up. I mean, it's like the most basic form of economics right there. The inflation issue is interesting because it's also going to diminish buying power, especially for a first-time home buyer that hasn't experienced gains on their home or hasn't experienced inflation on their home. If they're starting from scratch, their dollars, inflation basically means that your dollars are worth less than they were a year ago. Your buying power has been shrunk. Now, if you own real estate, go ahead.
I was going to say the beautiful part for real estate agents right now is that your income is connected to these increasing prices.
And so homeowners have the same thing too, right?
What?
Homeowners also experience that. So like your house, right? With inflation, they're kind of hedged against inflation with their home.
Real estate is one of the best hedges against inflation.
Right.
So I want to keep going here because we only got a few more minutes. Another thing that I always was interested in, and I wanted to let sellers and buyers know that I knew the market. One of those areas that I would talk about is price per square foot. And in this area, you have new construction and you have existing, or you might have an older, what do you call that, Paul? Gentrification market like Heritage Hill. But I would want to know and follow along. And years ago, they never put it on the listing. Today, they actually, in most markets, there's a spot right there that says price per square foot. Well, in the past, people, you call up appraisers and they'd say, well, that doesn't really matter. It's like, what do you mean it doesn't matter?
Yeah, builders don't like talking about price per square foot either.
I'm looking at the numbers and I'm going, why is it that builder's home, if I added 200 square feet, why did it just go up $100,000? Well, because somehow it was connected to square footage. So you have to know price per square foot of new construction. And by the way, there's probably about 3 or 4 levels. There's entry level, there's mid level, there's above level.
Also, really quick, there's also ranches. There's 2 stories, there's levels.
I can tell you right now that you will probably not be able to build a house under $200 a square foot.
Right.
I can tell you that it's not uncommon for people to get a price of $300 a square foot right now for an above average home. And I can tell you if you get anywhere close to luxury, you're talking $400 to $500 a square foot today. Now, if you know that and you're talking to somebody and they want to sell their home for a certain number, you can say, well, you're approaching luxury, brand new luxury home price per square foot here. And so you can have that conversation with a seller, and that makes you knowledgeable and somebody worth listening to. And so what we've gone through here right now, Paul, are you've got to know the inventory. And again, you can break that down by areas. You can break it down by price points. You can break it down by ranch or 2 stories. And the more knowledge you have, the more powerful your presentation will be. And you will have less of these scenarios where you walk away without a buyer or without a listing. Yep. And so I just always wanted to make sure that I knew more than whoever it was that I was talking to. And it took a lot of work. It took research. It took time. But as I looked at it, I thought, well, where else can I make this kind of money per hour? And it's like, I think the research time, the knowledge time, the strategy of understanding this stuff is so vital. And that's why statistics have always been so usable and so helpful for myself, combined with relationship. So there's other stats that I would bring out here, like understanding the difference between the median and the average. You know,
and so Greg, if someone was really quickly though, if someone was wanting to try and do more of this, unfortunately, not every MLS makes it easy to do this.
Yep.
So what you have to do is if you are, and if you guys can reach out to us too, if you say, hey, I want to learn to do poll stats on my own. I want to know where I can go to get these things. There's places you can go. And, you know, I would start with your MLS and say, hey, if I want to understand how to pull, like, show me the inventory, show me the averages, show me these things, call your MLS and say, give me the step-by-step, click by click, how I can pull this for myself.
They're supposed to be, you're paying them for this knowledge. You're giving them this knowledge.
They have all the data.
They have all the data.
All the
every
data.
association, every MLS ought to be doing this work on your behalf.
Right. So if your association does not provide this for you, give us a call. Let us know which association you belong to. We will work with you to figure out how to get it. We'll put pressure on that association to help us get it. But this is information that you should be having, because this information is actual power that gives you strength, that gives you confidence that you can use for your advantage, and actually helps your clients out too. It's wonderful. So look into it. We want to encourage you guys to take that responsibility on as your own. You know, there's companies out there that release little bits of data. We release some bits of data here and there, but if you want to become an expert, you have to do it yourself and take the responsibility on yourself to become an expert. So
let me give you my crystal ball prediction
2022.
Here. I think rates are probably going to go up to 1%. There's a lot of people.
They're going to hit what, like close to 5% then?
I think they're going to be just under 5%. They could pull back if the market starts slowing, if the inflation starts slowing. But as long as inflation is still spiking, it's going to keep moving. I think that it's likely that home prices will increase 10% or more in 22. I think that there will continue to be this fast, high velocity market.
We're going to keep it.
Builders are not building enough homes. What's that?
They're going to be a tight supply.
I believe we're going to continue to see this. This is our 7th year of under a 2-month supply in the kind of like the West Michigan market. And you know what? I don't care if you go over to Detroit or, as I said earlier, Traverse City, wherever, everybody's experiencing this. It is the same thing.
So this is another, while you just mentioned builders, this is new house starts and permits. So you can see right here, this was 2006, right? Right before the market popped. What happened to building starts? Look at this. And they still haven't caught back up. See where we're at?
And so what we need every year for housing is right about where you're at right there.
Yeah.
And so every one of those years on the way down and coming back up,
we lost ground
underneath the need. So the pent up supply or the pent up undersupply has been building every year. So
what you're saying is we needed to be here. This needed to be right here in this level here for this entire time frame to have a stable building market.
So we got a long ways to go to catch up, which is why I don't think you're not going to wake up in the next year, maybe 2 years, where we're going to have what I would call a so-called anywhere near what we would call a normal market.
Yeah, I think we've got several years of tight supply minimum.
And if a buyer or a seller challenges you, say, guys, I don't know how you get around the supply and demand economic concept.
Yeah.
High demand, low supply, prices are going up. So as long as we're there, I don't know how this stops. So are you going to see in some markets the average price end up at $350 by Christmas of 22?
Yeah.
Be close.
Yeah.
Yep. So anyway, hey, I hope you got something out of this. I hope you can use some of this in a presentation in the coming days. I hope you will take time to research and know your numbers so that you too can and they want to offer expertise that, and in the end, you know what? I never told people what to do. I only told them what I was seeing, and it was up to them to decide how they wanted to take and use that information. I didn't tell them what they had to do. I offered information to them, and
You're an interpreter and a guide.
right, but I never did I decide.
Yep.
So anyway.
All right. Well, thanks for sharing all of your wisdom with us today.
Well, hey, I hope there was something there of value that can
I think there was.
All right.
All right. Thanks a bunch. All right, everybody. We'll talk to you guys later. I will share these. I see some comments asking for these stats. So I'll share where I got all this stuff from. See ya.